Hello, so I'm going to talk a little bit about Australia's unemployment data today, and of course the RBA and the general outlook for property market in Australia, which obviously is hitting some headwinds. So unemployment in Australia today came in at 4.2%. So it's just edging higher all the time. In fact, it's been a very steady trend higher for unemployment in Australia for some 2 years now. Yet despite employment being part of the Reserve Bank of Australia's brief, who I like to call the Reverse Bank of Australia, they continue to kind of almost, sort of an emotional attachment to wanting to raise interest rates further in Australia, even as unemployment is above 4% and continuing to climb. In fact, I think it was only last week that the governor of the Reserve Bank stated that, she felt the Australian economy was still overheating. So try saying that to all the builders and other companies and businesses that have gone out of business in Australia in the last 2 years. In fact, receiverships in Australia, business receiverships in Australia are the highest, as high as they were in the GFC. So the economy is not strong. We know that manufacturing's been struggling. We know that retail sales has become spotty. And there's anecdotal information everywhere suggesting things are not good, that interest rates went too far. Now, those of you who have been following me for many years will know that in the middle of COVID, or just coming out of COVID, when Governor Lowe, who was such a good governor he had to be replaced by the Treasurer forcefully, he was saying that he wouldn't be raising interest rates until 2024 from zero. And this was during the post-COVID economic boom. And it was an economic boom because of the huge fiscal spending. In fact, Australia had per capita the highest sort of pandemic fiscal support in the world. So with not really that higher number of cases. So all of that added to the near zero interest rate policy of the RBA to create quite an economic boom and a flurry, of course, in the property market. Now, at that time, I said what will happen is this means the RBA will be late in raising interest rates. I said at the time, no one liked me for saying it, but it would have been the better outcome that the RBA should at that time have been raising interest rates immediately by 0.25%. In other words, steady small steps, only up to probably 2.5 or 2.75, maybe 3%. Doing that ahead of the inflation tsunami that was coming. I wrote an article on the global inflation tsunami that was going to hit Australia. Remember that when the RBA was saying, the global inflation issues, they're not going to affect Australia. Australia will be fine. So they get everything wrong, or really they do. That's why the OECD once called for an urgent review of the RBA, its performance, its charter, and its board. And Australia, the RBA has the prestigious position of being the only central bank in the OECD that the OECD has had to raise questions about their performance and capability and the way they do things. So I said at the time, they should have been raising interest rates slowly so they will not have to, in the future, chase inflation with very aggressive interest rate hikes. Because that's probably what is going to happen, because I knew they wouldn't listen to me in real time. They're not listening to me in real time now. In fact, I've said on national television that the RBA should already have cut rates 3 times. At the meetings where it's been raising rates recently, it should have been cutting rates because the Australian economy needs that support. This little bank down in Australia cannot control the global energy prices. It cannot control the geopolitical events that are now occurring with such speed and rapidity in our same word, I think, in our world. So they shouldn't think that they need to raise rates because it's a different type of inflation to the 1960s textbook that obviously they still read every morning with probably their quaint little cup of tea. To you tea drinkers there, no offense at all. The what I'm saying is they don't understand the modern economy. They don't understand global forces. They don't understand how Australia's economy functions even domestically, or how that plugs into the global and regional economy, particularly, especially the regional economy of Asia. So when we have our national interest rate for everyone, businesses, property owners, borrowers of all kinds, set by an organisation that isn't competent and yet highly paid, with very little international experience. I mean, I'm more experienced than anyone at the RBA, and I'm out here just, walking on the beach. So I said they'd have to chase inflation, raise rates too far, then they'd go too far, and that would cause a resultant recession. I've said this years in advance that it would take years to occur, and that's what we're seeing. So Australia's unemployment rate today, 4.2%, is just this chipping away at the underlying foundation and strength of the Australian economy that is likely to continue for the next foreseeable 1, 2 or 3 years. Yet, so I've said some time ago that the Australian property market will face some headwinds, but it will still be relatively okay, but you need local knowledge. Now, the headwinds are that the Australian economy is probably, virtually definitely, and a whole lot of people are saying what I said a couple of years ago, are saying it now, is headed for recession. And part of the reason it's headed for recession is because of the too much easy money post-COVID that caused a euphoric economic boom and overspending. Because when you have a party, there's always a hangover, you see, and that's as true in the economic world as it is in your personal life. So the hangover is hitting, but the hangover that would have occurred anyway is hitting now with a central bank that doesn't really understand the world and has rates too high already and is thinking about raising rates again, and somehow cannot see that the Australian economy is already perhaps even in recession, but we haven't got the data yet. We'll get the data in 1, 2 or 3 months' time. So what I'm saying is what would have been a natural recession to the previous eras of the central bank, creating a boom and then a bust cycle, exaggerating a boom and bust cycle, which is the exact opposite of what they're supposed to do. So adding to that problem is yet another fumbling of the ball, huge error, in that they're going to now keep rates too high for too long. Just as they kept rates too low for too long, they're now going to keep rates too high for too long. And this is definitely going to cause a recession. For property markets, this is a pretty serious headwind. And normally it would probably mean falling property prices. And by the way, some specific locations are falling in price. Some cities are showing significant early warnings of price moderation. Other cities still growing strongly. This is going to be a period where local knowledge, real estate agents always say location, location, location. So it's going to be a situation where local, regional, suburban knowledge even is going to be very important, because there's two get out of jail cards, or two trump cards, if I can use that word, that will support the property market through the oncoming recession. I guess there's three. One is smart selection of properties, which you should go to propertyclub.com.au for. They've got experts all around the country in all these different suburbs and areas. And their advice is free, by the way, and they have fabulous tax expertise as well on property investment. So please take a look, propertyclub.com.au. So one, knowledge and specific knowledge, location knowledge will be important. Two, the saving grace, the two economic saving graces are, one, immigration, and two, the RBA will be forced to wake up to the slowing Australian economy, because the data will just get so bad that even they, now wanting to hike rates, will suddenly be cutting rates. Remember, this is the central bank that raised rates 3 times in the GFC, the only central bank in the world to raise rates in the middle of the GFC. It was already underway. They sent Victoria and New South Wales into recession. Australia's aggregate GDP data only avoided recession because mining increased 16%, because China managed its economy so well during the GFC that it continued to boom and buy our exports, and our export data stopped the national aggregate data from falling into negative. But New South Wales and Victoria, our most populous states, did have recessions, and the RBA was responsible for that. This time round, China is looking to diversify its exports away from Australia wherever it can, given that we've taken on a different diplomatic posture, shall I say, in recent years. And so there's still going to be support there, but not as much as there was previously. So this time I think the RBA may well be capable of driving the whole economy into recession. But what I'm saying is the economic data will get so hard that even the RBA will have to start cutting rates. So this will support the Australian property market. The moment that starts to happen, a whole lot of property investors who are standing on the sidelines will think, oh, this could be the moment to go into the market again. So that will be a really important factor. And that will happen sooner than most people think, because unfortunately I think the economic data is going to get really ugly and tragic very, very fast for the Australian economy. So soon it will be obvious to all that we're headed into a recession. Not something to celebrate. And the other card, Trump card, get out of jail free card, is immigration. Now, people know that there's a lot of immigration. They know it has an impact, and they know it's driving rents higher, and they know it's been supporting property prices. But most people have no idea how much immigration Australia is having at the moment. Do you know this is the highest immigration level we've had since 1893? Not 1993, 1893. So when we had this small population and lots of people were coming over in boats, that percentage of immigrants to the local population is what we're having now. We haven't had this much immigration since 1893. This creates a pipeline of 3, 5 or 6 years of strong support for both the rental and the purchase market. History suggests that 30% roughly, or a little bit less, of immigrants are buyers of property, leaving 70% who are renters of property. And with that extreme level of immigration, by the way, Australia's immigration level is twice that of the USA. So we're like number 1 in the world in terms of immigration at the moment. I bet you didn't know that. Australia is the world leader by a big margin in immigration. Well, I guess it's always been our history, so I shouldn't make too much of that point. And then comes second the USA, and then another gap to the rest of the world's immigration levels. But it is really extreme at the moment, even for Australia. And that means if you have the knowledge of where that immigration flow is going, you know those rental markets are going to be highly supported. And it means that people, come to the country, they get jobs, they get an education, they do what they're planning to do to build their lives. And so with time, they end up being property buyers. So that's what I mean by it's going to be a 3, 5, 6 year support aspect to the Australian property market. So I guess the big things are, if you have local expertise, you have specific knowledge, you know how to manage a tax-effective property investment, I think it is still a good situation, even in a recession. I mean, certainly when the RBA finally cuts rates, you should really take a fresh look at the Australian property market. That's my 2 cents worth. It won't be a broad-based property market lift. I would actually be more cautious of very expensive high-end properties at the moment, as bonuses could get cut over the next 1, 2, 3 years for the top 10% of earners in Australia. But certainly those RBA rate cuts will make investing in property in non-super rich areas of Australia very, very interesting indeed. I hope this helps. I wish you all very well in your day, in your week, and your month ahead. And remember, life's what you make it, I guess. I tried to think of something clever to say at the end, but I just want to wish everyone the best. Have a great day. All the best. Thank you.